The dark side of Forex. Why you can't stop trading even after losing. Have you ever promised yourself you'd stop trading after a loss, but then found yourself right back in a market just minutes later? You told yourself you'd be disciplined. You told yourself you'd wait for the next setup. But instead, you kept clicking trade after trade, watching your account balance sink lower and lower. This is the dark side of Forex. The reason so many traders can't stop trading even after losing. And today, I'm going to expose what's really happening behind the scenes in your mind and how you can break free before it destroys your account. Welcome back to the channel. Most traders think their biggest problem is not having the right strategy, but in reality, their biggest battle is with their own brain. The inability to stop trading after a loss isn't just a bad habit. It's a psychological trap designed by the same mechanisms that make casinos billions of dollars every year. If you want to understand why you keep over trading, revenge trading, and chasing losses, and more importantly, how to stop it, stay with me until the end. This could be the single most important lesson you'll ever learn in Forex. Section 1. Why traders can't stop. Let's be honest, trading is addictive. Every time you place a trade, your brain releases dopamine, the same chemical that gamblers get when they pull a slot machine. That dopamine hit creates excitement and anticipation. Win or lose, your brain starts craving the next trade. Now, here's the dangerous part. When you lose, your brain tells you, don't stop, make it back. That's called loss aversion. Psychologists have proven that people hate losing twice as much as they enjoy winning. So instead of stopping, you keep going, desperately trying to erase the pain of a loss. That's not trading, that's gambling. And it's the fastest way to blow an account. Section 2. The illusion of control. Another reason traders can't stop is the illusion of control. You think, if I just take one more trade, I can fix this. But here's the truth. The market doesn't care about your losses. It doesn't know you're desperate. It doesn't know you will win. Yet traders convince themselves they're just one trade away from being back on track. That belief keeps them glued to the screen, clicking over and over, digging deeper into the hole. This is why casinos let you keep playing. They know you'll keep betting, thinking you can control random outcomes. The market works the same way. Section 3. The emotional spiral. Once you start trading emotionally, you enter a dangerous spiral. First comes revenge trading. You want to get back at the market. Then comes over-leveraging. You increase your position sizes, hoping to recover faster. Finally comes desperation. You abandon your plan completely, taking trades that make no sense. By the time the spiral ends, it's usually not just your account that's empty. It's your confidence, your discipline, and sometimes even your belief that trading is possible. This is why so many traders quit Forex, not because of bad systems, but because of psychological destruction. Section 4. A real story. I knew a trader named Michael. He started with $5,000. One day, he lost $500 in trade. Instead of walking away, he doubled his next position, determined to win it back. He lost again. He doubled again. By the end of the night, his entire $5,000 account was gone. When I asked him why he didn't stop after the first loss, his answer was simple. I thought I could control it. I thought I had to make it back. Michael didn't blow his account because of the market. He blew it because he couldn't stop trading after losing. Section 5. The psychology of addiction. Here's the scary truth. The markets are designed to trigger the same psychological patterns as gambling. The flashing charts, the uncertainty, the thrill of not knowing if this trade will win. It's all a perfect recipe for addictive behavior. Your brain gets stuck in a cycle of 1. Anticipation before the trade. 2. Dopamine during the trade. 3. Relief or frustration after the trade. 4. Urge to repeat it all over again. That's why you can't stop even when you know you should. You're not fighting the market. You're fighting your own biology. Section 6. How to break free. So, how do you escape this trap? It comes down to building rules that protect you from yourself. Here are 5 powerful steps. 1. Set a daily loss limit. Decide in advance the maximum you're willing to lose in a day. Once you hit it, shut down your platform and walk away. 2. Use time limits. Limit how long you spend trading. If you've been at the screen for hours, Fatigue will make you emotional. 3. Predefine trades. Before entering, know exactly where you'll exit, both for profit and loss. No exceptions. 4. Keep a trading journal. Write down every trade, especially the emotional ones. Patterns will reveal themselves. 5. Reward discipline, not profits. Measure success not by how much you make, but by whether you followed your rules. The goal isn't just to protect your account. It's to rewire your brain so trading is no longer an emotional roller coaster. Section 7. Why this matters. Here's the hard truth. You can survive bad strategies. You can survive losing streaks, but you can't survive compulsive trading. If you can't stop after losing, the market will eventually take everything from you. Your money, your discipline, even your hope. But if you can master the ability to step away, you've already gained something most traders never will control. So the next time you feel that urge to trade again after a loss, remember this. It's not the market you're fighting. It's your own mind. Trading isn't about winning every trade. It's about staying disciplined, managing risk, and protecting yourself from the dark side that pulls most traders under. If this video opened your eyes, hit that like button, subscribe for more deep dives into the psychology of trading, and share this with someone who needs to hear the truth. Thanks for watching, and remember, the best trade you'll ever take might be the one you don't.